Hi there, welcome to the Funding Doctors COVID-19 Finance Survival Guide. This is a webcast that I'll put out every day, updating people on the essential question of how to navigate the COVID-19 pandemic from a financial perspective. The main question that we'll be addressing every day is where to find money and how to secure it. We'll also talk about problem areas that are out there, what's difficult, and what it is that you can do to avoid those problem areas. Later in the week, we'll talk to some Australian private lenders, guys who are still in the market, and get their perspective on how deals are actually getting done and what it is they need to get deals done. We'll talk to one of America's leading artificial intelligence driven stock trading experts to talk about what he sees in the market. Obviously, the markets have been in free fall since the pandemic was declared, and he'll talk a little bit about what he sees, what sectors are going up and what are going down, what he thinks will recover first, and how long it is we'll be in this negative state. We will also talk with Australia's leading expert on risk mitigation, who also happens to be a private lender. Let's jump right into it and talk about what we're seeing in the market right now. So the big thing that I have to say starting off is the short-term sector is really, really under pressure. So if you're looking for a short-term loan, that's an area that is really, really struggling right now. I know at least two of the biggest lenders who have left the market. They're just sitting out on the sidelines. One of them said they'll be out for 30 days. The other one said they'll be out for an indeterminate amount of time. And they might actually even have liquidity problems themselves as well. So keeping a close eye on that. There's one other group that I know who is still in the market, but their deals are getting more difficult. So the short-term sector for sure has really, really dried up in a very, very quick time frame. The land banking, construction, and commercial loan side of the market is still open for business. You have a number of groups who have exited, and that's probably only going to get worse. But there are a number of groups, number of lenders and investors who are still in the market and are wanting to put their money to work. Basically, their view is that this is a short-term problem and that when we come to the end of it, most of the projects that are going on, they take 12, 18, 24 months. And by the time we come to the end of that, we'll be out of the this COVID-19 situation, and that will be a great place for them to have their money. That is the view that they have. I know at least one of them who is really, really looking at this as a market opportunity to be really aggressive and take more market share. But on the other hand, the deals are getting tougher. They are looking harder at deals. Anything that would cause a problem previously, like rural deals have more challenges. Stuff that's not on the east coast of Australia has more challenges. Borrowers who have a weak balance sheet themselves, they have more challenges. So all of the things that previously would have caused problems are causing even more problems. So the deals are getting done, but it's harder to get them done. The big thing that I have to emphasize on this type of, for this type of loan is that speed is of the essence. Every day that the deal doesn't get done works against you. And every day that borrowers spend negotiating the terms of the loan, the more likely it is that they just don't get it. Even as few as 2 or 3 weeks ago, I had people who I was working with who were negotiating really, really hard on interest rates and establishment fees and things like that, as they should do, as any business person should do. However, the market has changed drastically in a couple of weeks, and now the advice that I'm giving to people who ask is to move as quickly as possible to secure their deals, because it sucks to pay a higher interest rate or a higher establishment fee. Nobody likes to do that. But the question is, what's the impact of that versus not getting the money at all? And that's really the situation that lots of people are in, that lots of projects are in. So I encourage people to take a realistic view of the trade-offs between continuing to push harder and argue longer and not having the money at all. I know several deals where the guys were pushing pretty hard, negotiating pretty hard, and the lender has subsequently just backed away altogether. So that is obviously a problem. An area that is becoming more active is the distressed asset financing side. The problem with that is that the discounts those guys are seeking are deep. I'm talking about 50 to 80% discounts on projects or on the value of projects. So unless you have a considerable amount of equity in something and you just need a really, really small amount of money to get it over the line, it's probably not worth it, and it's probably just a way that you end up losing your assets. So I guess the general message for today is there are still finance options that are available out there. Short term is obviously difficult. The other things are open, but speed is essential, and securing the deal rather than focusing on trying to get a half point better or 1 point better on the interest rate is probably more important. Tune in tomorrow and we'll talk to a private lender about what they're seeing in deals, what it is that they're requiring from deals now, and how they see it going forward in the Australian market. If you have a question, or if you have a situation you'd like to talk to me about, you'd like to get to some of this money, then please either click on the link below or give me a call on the number on the screen, and let's have a chat. Thanks so much. This is the Funding Doctor. Take care, and we'll talk tomorrow.